Welcome to Mortgage Matters, your go-to podcast for everything mortgage related. My name is Nicole McConnell, and I'm here with my co-host, David Steinberg. Good morning, David. How are you today?
Great, Nicole. How are you?
Fantastic. Did you hear the fantastic news this morning? Of course you did.
The Bank of Canada announced an overnight rate drop of 0.25%.
We'll go into some of Tiff's reasoning today and sort of what happened with the announcement, what we can predict what's going to happen in the future, and a little bit about what does that mean to you as a borrower.
Yeah, the Bank of Canada lowered the interest rate from 5% to 4.75%. So Bank of Canada prime rate, which is currently pegged at 7.2%, is now dropped to 6.95%. So this is great news for variable rate borrowers, and it's great news for people that are looking to get into the market. But I want to back up a little bit and say it's good news in that it's happening, but we have to also be aware that it was just a 0.25% drop. It's not like it came down a full 1%, for example.
Absolutely. But you have to remember, though, too, for people who are still variable rate, who have been riding out the wave, this is very good news indeed. Variable rate mortgages are still a lot higher than fixed rates. And so fixed rates, because they're influenced by the bond market, aren't going to be as affected by this. But we'll get into that a little bit more. Let's talk more about the Bank of Canada announcement. What were your impressions, Dave?
My impressions were that the Bank of Canada made this move because there's enough evidence to them now that our economy isn't overheating anymore. Our economy is now moving at the pace that they want to see, between 2 and 3%. So they've seen inflation now between 2 and 3% for the last 4 months. The economy is now experiencing the results of that higher borrowing cost, and the economy has slowed down to a point where the BoC and Tiff Macklem thinks that it's safe to lower the borrowing rate, keep nudging the economy forward, sort of going for that soft landing. So we never really...
It's really interesting because Tiff Macklem was, he was very adamant about the fact that we're going to be taking this meeting by meeting, meaning that not necessarily in July are we going to see another rate cut. But it was interesting because you watched the first couple of questions. And I know we were talking about this earlier, and both of the first questions were essentially, when is the next rate cut? Can we see the next rate cut in July?
I don't want to bring everybody down, but at the same time, I need to say that it's not like the rate came down from 7.2% to 6.2%. It came down 0.25%, which is a very small amount compared to the overall rate, what it is right now. But this more just signals that the bank is ready to say that they're not going to be increasing the rates anymore. And now we're on that way back down. He did specifically say, like you said, he said they're taking it specifically meeting by meeting, which specifically means that he has to see the data. He has to see May economic data. He has to see June economic data before he makes another decision to drop the rate again in July. So
because what happens, right? Like, so if we cut it again next month too prematurely, for instance, what would happen?
If he cuts too prematurely or by too much, he even mentioned they don't want to make the same mistake of dropping the rate too quickly and too much. Because what that did back in 2020 was, as soon as COVID happened and they dropped the rate basically to 0% lending, or 0.25 the overnight rate was at, it spurred on too much economic activity in our housing market specifically. So that's partially what started driving the incredible demand that we saw over those next couple of years. And he was very specific to say they don't want to make the mistake of dropping too much too quickly. So that's why today we only saw 0.25%. And on July, we can probably another 0.25, but he was very specific to say meeting by meeting. And people shouldn't necessarily jump to conclusions that this is going to start the variable rate drop, that it's going to go down very quickly. He wants us to all be very cautious and to sort of like maintain calmness. Yes, the rate did drop, and it probably is signaling that rates are going to come down over the shorter to long term, but he doesn't want to promise anything at this point in time, especially if the economy heats back up.
Oh, exactly. I think what's really important to keep in mind is that analysts are still projecting a 0.5 to 0.75% drop by the end of the year. So not all at once. This is going to be a gradual thing. We might see little dips in the road, but it will be interesting for me to watch the housing market to see what starts to happen. Because right now, with the interest rates so high, we have a lot of buyers that are sitting on the sideline, waiting and biding their time to trying to get into the market. And now, as the interest rates are starting to go down, it'll be interesting to see where that tipping point is, where the prices of houses start going up, coinciding with the interest rates going down. So that'll be interesting to see.
Yeah, it's definitely going to be interesting to see how our real estate market reacts. I know that back in 2020, 2021, when sort of here in Victoria specifically, the market was sort of going nuts, and some desirable houses, or most houses, were getting 5, 6 offers on them. Some of those offers unconditional, and some houses even garnering 20, 30 offers, and many of those offers unconditional, and people bidding $100,000 or $200,000 or $300,000 above the list price just to get the place. What I think about now is that with this interest rate drop of 0.25, even though it's not that much, we're now going to see a lot of those folks that didn't end up buying back in 20 or 21 think, okay, now's the time for me to try to jump back in. So we might see our phones start ringing and realtors' phones to start ringing with people that are like, okay, we've seen enough. We've seen what the government is planning on doing. Now we're ready to get back in. Now let's start looking at houses. Also, on the other side of that point, our inventory in our real estate market here in Victoria is that we have a lot of listings now. Now we have a lot of people that have been frustrated by high interest rates and are kind of like, maybe they've reached their tipping point and saying, okay, now I'm going to sell. And that might be the wrong move. It might definitely be the wrong move now, because we're finding that we're in a bit of a buyer's market comparatively. And we're probably also, because of the capital gains tax, Nicole, we are seeing probably some investors cash out. So that is also maybe caused some more inventory to hit our market. But what we're seeing now is we're seeing a very high inventory and not a lot of buyers. And what's going to happen is the buyers is going to pick up. They're going to start eating away at that inventory. Those buyers are going to get all the deals that are out there to be had right now. And we're going to enter back into a more balanced market. Like, I don't think we can necessarily expect this buyer's market to last for a while, especially as rates go down.
It never does.
Yeah, exactly.
Yeah, these things change, right? They change with all the economic factors that weigh into, the pricing market for a particular location. Like, if you look at Calgary's real estate market right now, it's insane. Why? Because people from Victoria, Vancouver, Toronto are moving to Calgary to take advantage of the cheaper housing prices. So they're seeing the inverse effect happen right now, where their prices are much higher. So that's going to come. It'll come back. There's always dips and valleys in the world of real estate. So it'll be interesting to watch that.
Yeah, nothing ever happens. We have to remember and keep in mind, nothing ever happens in a straight line. You brought up an interesting point about migration within Canada. Our market, Vancouver, Victoria, Toronto, those markets have become unattainable for most people. So people are looking to smaller cities. I guess Calgary's a big city now, 1.5 million. Edmonton's a big city. And you can still get a house in Calgary for $400,000 or $500,000. You can't get a house in.
It's higher than that now. Maybe in Edmonton, but Calgary is definitely higher.
Yeah. It is higher. Like we're seeing some. I still have a lot of clients in Calgary because I'm from there, and we have a lot of clients there. And yeah, they're buying in between, 600,000, I guess, which is still relatively low to Victoria.
Absolutely.
But what I did read in the Globe a while ago is that condos in Toronto have specifically taken a big hit, and we're talking probably about a 20% valuation hit, with a lot of the condos flooding the market there. Probably a 20% valuation drop. Now, we're not going to expect that 20% drop here in Victoria, because sellers they're going to hold on to their property versus sell at a much lower price point. Toronto is such a big market compared to Victoria that it is a good indication as to what's happening in our real estate market, in that where there is a lot of flooding of inventory, the interest rates have caused those real estate prices to drop.
Yeah, so let's look at it from another angle, though. So we've been talking a lot about buyers and what that means to buyers. But there's no secret. We have a lot of mortgages that are going to be coming up for renewal within the next year or two. And these people have, locked in at a very low rate. So I think I'm a glass half full kind of girl, but I think that this is a very promising indication of where we are going. And that's going to make a huge difference to those with mortgages that are coming up for renewal. And it'll play into how they react, whether or not they take a variable rate mortgage or they lock into a fixed rate. So these are all interesting factors that are all going to be impacted by this decision today.
Exactly. We're operating within a fluid environment, meaning that when I have a client call me and is talking to me about these decisions, we're talking to that client in real time, and we're having to help that client make his decisions based on what his options are. Even if the option is, okay, you have a renewal coming up in September, like I don't even want to talk to you now then, because June is going to happen. June just started. July is going to happen. August is going to happen. We might be singing a very different tune by September. So it really depends if people's renewals are coming up now, like in June or July, they're having to make decisions. What am I going to do? Am I going to go fixed or am I going to go variable? Versus people who have renewals coming up in September or October. I can have this basic conversation with you now and sort of give you an indication as to where the markets are at now. But after in October, there's 2 more rate decisions at least, we could be singing a much different tune. So with regards to these people that are renewing,
we should be looking at these mortgages as they come up for renewal about 3 months in advance. Start looking at it, planning, working with your mortgage broker to be able to come up with the best strategy and move forward.
Exactly. I think the key point here is that for people who have their mortgages coming up for renewal, it's a good time to contact I would say our office, of course, because I think we're the best at mortgage brokering. I would say if your mortgage is coming up for renewal, whether it's August or September or October, contact our office now and start to get an idea of are you going to be able to transfer the mortgage? So are we going to be able to shop the mortgage to a different lender, or are you going to be in a position where you have to keep the mortgage at your existing lender? We'll figure that.
These will be a no obligation whatsoever consultation with us where we can help you build a strategy for how to move forward with your mortgage.
Yeah,
but
exactly.
I mean, this is all very important, right? Like all these conversations that we're having are so important to actually look at it and stay informed on what is impacting the mortgage rates. How is that going to impact you as a mortgage holder? And where can we move forward to next?
Yeah, exactly. So one of the points that I'm sort of stressing with a lot of folks right now is that fixed rates move independently of variable rates. So the rate drop today is really only affecting variable rate mortgages. What's going to happen and what we see happen often is people think that something is going to change with the fixed rates when the variable rates come down, but it actually doesn't. But what does happen is as our lending rate comes down, it's going to spur on more investment, and money will flow from the bond market back into our business markets, our stock markets and businesses and investing. And that effect is going to spur fixed interest rates, I should say, to come down. So is part of the strategy of sort of waiting.
Good news, Dave.
It is all good news. And part of the strategy is for a lot of folks, it's just take the variable rate for now. When I say take the variable rate, I'm just saying take it just for now so you don't have to make the decision to take a fixed rate right away. It's like a wait and see approach, because with most variable rates, especially with all of our lenders, our clients can lock into the fixed rates at a time when they want. What I'm saying is that if we wait for more things to happen, especially if we're looking at the US election, which I think is going to be a key point for people to see maybe what's going to happen with the economy, we could see fixed rates drop to anywhere from 4% to 4.25. I would even venture to say we might see fixed rates in the low 4s, maybe even high 3s. So for somebody to lock in right now at like around 5%, just because they think that the rate might not go down anymore, these cycles last longer than just a couple months.
It's true. And what we have to sort of keep in mind too is that variable rates typically over the last 20 years, they have been lower than fixed rates.
Right.
And so we have to remember that, right? There is a lot, and I mean, banks have been saying it for years. There is some risk associated. And in the last couple of years, we have seen that risk play out for variable rates. But, you know, as the market starts to stabilize, those are going to come back into line. And that is what we're starting to see today.
Yeah, those that are in a variable rate already are going to start seeing the benefits of the rate drops immediately. They're going to start seeing their rate go down from, let's say, 6.4 to 6.15, and they'll experience a drop right away. And they'll experience drops with every single rate drop that's coming along. So for those that are in the variable rate and have bore the brunt of the last 2 years, I would say, well, stick to it now because you're only just going to start benefiting from it now. There's going to be some benefit. And part of that benefit is going to be able to wait for fixed rates to readjust. So instead of taking something at like 5% right now, for most folks, I say take the variable rate and then wait for the rate to come down. Wait for the fixed rates to come down is what I meant to say. But I have to preface this. So as a mortgage broker, I have to be careful in recommending the variable rate to people because some people will just not qualify for the variable rate. They'll only qualify for the fixed rate at the time. We as mortgage brokers are kind of stuck into, we can't offer the variable rate to a lot of people because the rate is that much higher and they just don't qualify for it.
Right. So there you have it, folks. This is what we know today with the Bank of Canada announcement. Stay tuned. Listen next week as we delve into the next topic, yet to be determined, but we will be posting these little tidbits so that you can learn from our expertise, because as our listeners, we want you to be informed on everything about mortgages. So thank you so much for tuning in.
Okay. Thanks, guys. Thanks, Nicole.